it's creating a really unpredictable environment. Look, this stuff isn't just background noise on the news. It has a direct impact on asset prices, and it really favors countries with strong, resilient economies of their own. Okay, so that's the world we're dealing with. It's complex, right? But don't worry, we've got a playbook. 5 key pillars designed to help you navigate and even thrive in this new reality. Let's break them down one by one. All right, let's kick things off with Pillar 1. For what feels like forever, the US market has been the only game in town. But as we head into 2025, sticking only to the US isn't just leaving money on the table, it's actually getting pretty risky. And this table, wow, it really lays out the story. The S&P 500 in the US is trading at a forward price to earnings ratio of over 22. That's basically how much you're paying for every dollar of expected earnings. And let me tell you, over 22 is steep, historically speaking. Now compare that to Europe at around 14 and Japan at 16. You're simply paying a lot less for future growth once you step outside of the US. And if you want a picture of that risk, look no further. Think about this. Almost 40% of the entire S&P 500's value is tied up in just 10 giant tech companies. That is an incredible, almost dangerous lack of diversification. If just a few of those giants happen to stumble, the whole index is going to feel it. It creates this very precarious, no margin for error environment for investors. So where do we look? Well, Japan is a really fascinating story right now. And it's not just that it's cheaper. There's a profound structural change happening. A revolution in corporate governance is finally unlocking value for shareholders. The country is shaking off decades of deflation,